Okay, here's our broader market update on September 27th. It's Tuesday night. That's always important because if you have a move on Monday, Tuesday either confirms that move, so you get follow through, whether it's bullish or bearish. So essentially, you get either a higher high or a lower low. Another way of thinking about that, or it's a rejection, right? So you go in the opposite direction, right? Like you made a higher high yesterday, maybe you get rejected. And of course, neutral is possible too, where you just get kind of an inside day. As always, take a look at the links in the description. Cycles 101, super important. That video was actually recorded on January 22nd. So just a few weeks after we had the top in the S&P 500, 8 months ago. Imagine if you had seen that video then. If you haven't seen it yet, definitely take a look. That doubles as a cycle analysis 101, most importantly. But just keep in mind that is also during a very early part of this downtrend. So I think there's a lot to learn just from looking at that, seeing how that unfolds, because that's going to give us hints at what's to come. So let's go through this chart. We're looking at the SPX here. This is your daily chart. Notice I've marked this gap here. That was our gap down after the CPI print, right? So that print happened at 8:30. So we got a massive gap down. And we've just been rolling downhill since. Let's just do a quick comparison. From the low of the CPI print to today, we've gone down about 7.6%. Pretty substantial. From the high that marked the day before the CPI print, we've gone down about 12%. And we had this green day in the middle, and we had this day that was green at one point, but obviously did not end green, ended up being a big bearish outside day, and that was actually your Fed day, right? And so this is your lower high. Let me just draw that out again. Take a look at that. Take a look at the other videos to get some just additional sort of sample size. But this is a very clear downtrend. I mean, I'll just draw it so that we're clear. We make this low, then we make a high. What kind of high is this? It's a lower high because it's lower than that high marked 40, right? And then we come down here, we make a high. It's a lower high, right? We come all the way down here, and then we have this furious rally. So we actually made a higher high, right? This is a really, and we sailed above the 10 period moving average. And then we got slammed down, right? You can kind of think of it like that. We made this high, and then we've just kind of plunged since then. Now we have kind of bounced a little bit, right? Like this is how I mean, you can kind of quibble at the exact drawing of this, but like the point is, this is a clear lower high. This is a very clear lower high. Another lower high. This is something of a lower high in terms of cycle count, day 15. And this is a massively failed cycle because this was your last daily cycle low. And even if you say that wasn't a daily cycle low, well, this certainly was. And we've poked below there, and we haven't really gotten too much downside since. If you think about it, Monday and Tuesday, like really this week has been all consolidation, or mostly consolidation for the most part, right? Let's look at the weekly chart and we can see how that's represented. You have a really small candle, right? Look at these two big trend candles the previous 2 weeks. And then you have this tiny candle on the lower end of the range, week 15. We knew we were in weekly cycle decline when we got this top on week 9. If you're not reading that weekly report, you really should be. That one was, last week of August, right? Because this top came, right. So like we got the following week, we got, a clear swing high, and then we got followed through. That was with Jackson Hole, I believe. And so a lot of opportunities for you to get cautious, not be holding the bag, hopefully. And this is a very clear downtrend on the weekly chart. We just drew the downtrend on the daily. You can see this is the same downtrend, but it's now just represented on the weekly, and it's even cleaner. You have this little lower high, and then this. So at some point, we're going to get another lower high. Make no mistake about it. That is how markets move. But it's going to likely lead to another lower low, and then we'll get another bounce, and then we'll finally get a low that might be more sustained, and then we can start an uptrend. That I suspect won't happen until at least the 2023, probably thinking like late Q1, so like March maybe. That would put you right around 36 months for the full 3-year cycle. In terms of this weekly cycle, It's only week 15. So if we assume we're going to get, and I mean, that's not super late. This last cycle was 16 weeks, very atypical. We usually get cycles that are at least 20 weeks, right? The one before that was 20. The one before that was 31. The one before that was 24. The one before that was 27. You're noticing a pattern. The one before that was 26. But then you had this weird one that was 18. So that happens. I mean, in this one, it was actually a higher low. So it's a little complicated. But the point is, we're probably getting close to the daily cycle, to the weekly cycle low. If we assume that it's 20 weeks, let's just call it, right? Like, let's just say we're having shorter bearish cycles. That would put us at a bottom at the end of October. That's ugly. Now, again, I just talked about the idea of a lower high. I would expect we'd get a lower high before then. And I think that lower high actually ends up being a daily cycle low. We talked about this in the last video. But the next major catalyst, well, actually, we're going to have the jobs number next Friday. So that'll be around the what is that? It's just, yeah, this is your daily chart. That'll probably be like the 4th or the 5th, maybe. Let me just take a quick look here. Yeah, so that Friday is going to be the 7th. So that's an important day to watch. That's the market's going to react to that. And then we're going to get our CPI number, which is going to be the real catalyst. That usually drops around somewhere between the 11th or 12th of the month. So let's just say it's the 12th, right? So you can imagine a world, right? If we kind of like scenario, like I'll take this off auto so it's easier to draw this because we're now trending much lower. If we imagine that becomes our catalyst, that lines up well, right? Because that means that would be a daily cycle of just about 26 days. And if we somehow got a bottom on the jobs report, that could be a daily cycle of around 23 days. So that's going to be interesting. If nothing else, we know it's going to be some kind of important catalyst because the market at this point is just craving more data. The jobs number will be important to kind of understand, is the economy starting to roll over? And most importantly, is it something that might cause the Fed to get a little more dovish so that, you know, they don't give the market another 75 basis point rate hike the next time they meet, which is, I think, something that the market hadn't really come to terms with. Whereas, and I'll put the link in the description. Definitely, if you have the time, take a look at that press conference. It was very telling in that it would seem like the Fed is on track for another full point of rate hikes by the end of the year, which is important to know. And if we look at the monthly chart, again, I hope you're reading that weekly report, but I added these new moving averages, and I'll just say really quickly, moving averages in and of themselves don't mean anything as much as they just represent literally the average price over some number of days. So if it's a really long-term moving average, like the 100-day, for instance, you would expect price to be above that because it literally has to be in order to be in an uptrend, right? Like, you can't be well, that's not true. You could be in an uptrend after you've made some kind of major low and still be below moving averages. But the point is, when you identify something that's above moving averages, you're really just identifying something that's in an uptrend. And so if something is in a massive downtrend on higher time frames, you would expect at some point it's going to cross below a long-term moving average. So in this case, in yellow, this is a weekly chart, so this is the 200-week moving average. And you can see we're not quite there yet. And you can also see we sliced below it and closed below it for 3 weeks, actually, during the COVID crash. I'll zoom in there, right? So we closed below it for 3 weeks, and then we kind of rocketed higher and made higher lows from there. And we kind of kissed it in that December 2018 panic. We bottomed on Christmas Eve. So we kissed it there. And if you go back to like real bad news bears, like the financial crisis, we spent, I mean, let's just look at this, right? So we crossed below it here. And then, so we spent 123 weeks below the 200-week moving average. That doesn't mean it has to happen this time, but that's context for you. 123 weeks below the 200-week moving average. And of course, this was your .com bubble, and you can see, let's just, for argument's sake, see how many weeks that is. 148. So a couple of years at the very least, right? 3 years even in this case, is what. So it seems very likely. In this case, this was like a flash move, V bottom. But even with this V bottom, we still spent 3 weeks close below it. And so again, it's not about the moving average being magical in and of itself. It's just the fact that we're in a long-term downtrend. And so of course we're going to go below the average price over the last 200 weeks because we're in a really long-term downtrend. So that's the 200 week. That's something to watch. We may get a bounce around that level. I wouldn't be surprised. That might be a great shorting opportunity. And if we look at the monthly chart, I added the 50-month moving average. So that's about 200 weeks as well. And you can see we're hovering ominously above it, right? So right now it's at around 3,500. My base case is we get to the 3,200 area before this is all over, probably maybe much lower than that. But I mean, if you look at this chart, this is your monthly again. So notice I've removed the day 27 swing low because it's no longer in place. That was your June low. When we were like right here, it looked bullish. We were seeing month follow through. This was your monthly swing low. This is a really good example, a really good sort of case study of how you have to be aware of how candles can transform, right? And so this candle was very bullish at one point, this August candle, and then it completely reversed on us. You've got to be aware of this kind of thing. And so similar thing for this. It started green at one point. It was like, oh my God, we might make a bullish outside monthly candle. No, now we're failing below it. And so at some point, we're going to see ourselves below this 50 period moving average. We just barely closed at right below it for the COVID crash in March. And again, if you look at these longer periods of turmoil, we spend quite a bit of time below it. So for the global financial crisis, we spent about, call it, at least 28 months solidly below it. So again, this is going to be very similar to what happened with the 200-week moving average, because again, it's a similar time period. But this is the monthly chart, a bigger signal, more important, right? Because this is telling you that you're tumbling over on one of the highest time frames that there is. So not good. So month 30 of potential 3-year cycle, which is about 36 months, is what we would expect, right? So that tells us we could have another 6 months of downside. There is definitely going to be a time to go long. It may not come for quite some time. And if you're aggressive, it might actually be your time to start shorting. Let's flip over to some of the other indices to look at the levels really quickly. It's the same picture, really. So, day 15, this is the Qs. The Qs actually haven't even made, they haven't even made a lower low this week. They're still consolidating. It's still an inside week, but still incredibly bearish. If anything, that's giving you a chance to potentially short. And you can see the same thing, hovering ominously above the 50 period moving average. And let's just throw the 200 week moving average on here for the Qs. So the Qs have actually kissed it already. And it's funny, as we said, you might see a bounce around there, and we're not, I guess this is a bounce as much as we're consolidating. We're at least not plunging lower. And for the Qs, we never even touched the 200 week moving average for the COVID crash. And now we're just like ominously resting on top of it, like we're about to like spill over, which is what I suspect is going to happen. And if we go back to the global financial crisis, we spent quite a bit of time under that. So same kind of playbook, and that makes sense because the Qs definitely outperformed during COVID, but obviously for the global financial crisis and the .com bubble, they saw a ton of downside as well. And finally, the Russell, and this is important. The Russell is in a different place than those other two indices. That should probably be one of the first things that jumps out at you. This is the weekly chart. Again, this yellow line is your 200 week moving average. We were solidly below it for until July of 2020, right? So that COVID crash plunged us below it, And it took us quite a while to rally out of it. We did have this furious rally. You can see this gap on the weekly chart, and then that was your gap, the vaccine gap. And then we just ran here, and then we just consolidated for basically like, the better part of 2021, and then the breakdown started, right? And so we're now comfortably below the 200-week moving average on the IWM. And that's just telling you that this whole thing is rolling over in much steeper fashion than the other indices. Again, because all that moving average is a representation, again, of that the price over that number of days. And so this is just telling you it's in even worse shape. Like, we got this this distribution period here, and then this false breakout. I mean, this is dangerous territory here, the way we're like just comfortably sitting below that 200-week. And if we look at the daily, similar kind of thing, just kind of consolidating so far. Barely made a new low on that weekly, but monthly, same kind of picture, just kind of falling off a cliff. And on the monthly level, the level that would seem like a magnet would be 153. I mean, I think we get much lower than that. I could see us, also visiting this kind of important pivot around the 140 area, right? And as far as a 50 month moving average, we are below it right now. And so we've got just 3 more days to trade in September. So it's going to be a sort of photo finish. I mean, it's not going to be a photo finish. I think it's almost, I won't say impossible. It's incredibly unlikely that we're not going to close below the 50-month moving average for IWM. That's really important. Again, not because moving averages are magical, but because it's just another reflection of how prolonged this downtrend has been. And we can see we're making lower lows and lower highs. And so the moving average piece is just an additional signal. And if anything, if you think about it, that's one of the easier ways to run scans. Like, oh, what's above its 50-day, what's below? And so it makes sense that the market does react to those levels. If for no other reason, then it's easier to use that as a trend indicator than it is to actually identify higher highs and higher lows. I can run a quick scan to see how many stocks were above the 50 or below the 50, above the 10-day, whatever moving average I want. There are other ways to run scans for higher highs. That's how I run them. We can talk about that in a separate video. But what I'll say just broadly is amazing shorting opportunities are presenting themselves. IWM looks like a beautiful short here. And again, we're so stretched to the downside, though. I would not be surprised to see some kind of bounce. So I wouldn't short in the hole this like that. But my God, the next bounce. I mean, like, this is the bounce kind of thing that you short. Obviously, you don't short this. I'll just zoom in. You don't short this because there's no signal there. I mean, if you did, you would have gotten incredibly lucky. But maybe you short like here, or like after you print this, right? There are opportunities. So we're gonna look for our next higher low, and that's gonna be our signal to that there's blood in the water. And Dixie is probably gonna tell us something. It's on day 11 of its daily cycle, still making higher highs. That's not good for risk assets. Week 17 of the weekly cycle, and just look at, my God, at some point this thing is going to pull back hard, and that's going to be an opportunity as well, which can be played through UUP. Yowza. Okay, so that's the update.